Hello, everybody. Today is Monday, the 26th of April, 2010, and in this video, I'm going to try and pay attention to the European debt crises. And the first article that I have states Greece still under pressure despite aid pledge. And this article states financial markets up the pressure on debt-ridden Greece on Monday as investors remain skeptical about its long-term solvency despite assurances that a rescue loan will help pay off a chunk of its crushing debts in coming weeks. And when I look at this first paragraph, I noticed that they gave Greece the adjective for debt ridden. So they wanted to tell us that Greece is debt ridden. They are just doing so difficult because they cannot pay off their debt. And while the financial markets have upped the pressure on them, they're already having a difficult time as it is, and now they are being yelled at, or I don't know. But the pressure is apparently on Greece. And some might say, well, that's just very greedy of the banks. After all, they're just trying to make their money, and well, they're such greedy organizations, which they obviously are. It was very interesting to watch CNBC this morning, and well, Mark Haynes, who is a host on the show, was talking about Goldman Sachs, which is a financial market. And what he wanted to know was not if the company is greedy. After all, we already know that they are, but if what they were doing is in fact criminal. And well, well, let's just keep it at the point that well, they're just greedy as can be. And while the market fears appear driven by Germany's grudging attitude toward bailing Greece out, which could delay things. Longer term, some economists think Greece's growth prospects are so weak the government will not collect enough taxes to meet its obligations years down the road. And moving on towards the bottom of this article, the higher rate reflects fears that Greece is too risky to lend to and may someday fail to pay back what it owes. Greece's troubles have undermined the euro and raised concerns that if debt crisis may spread to other financially weak governments in Europe. Very interesting, because basically what they're saying is that it's a surprise, a huge surprise that we have a debt crisis, and that, well, Greece is too risky to lend to because, well, they just can't pay it back. And well, I know a lot of individuals are going through the same sort of deal. They're not speculating credit cards to company or to people like they used to, and a lot of the maximum payments are going lower. So they're doing this to a lot of people. Yeah, it's very interesting that the United States, which national debt keeps going higher and higher, approaching 13 trillion, still has the triple A credit rating. Very, very interesting, I must say. The next article comes from Reuters, and Portugal Greece default swaps hit record high. The cost of insuring Portuguese government debt against default jumped to a record high on Monday on concern that Portugal could be next to suffer a Greek-style debt crisis if no lasting solution was found for Athens. And the rest of the article really has data and whatnot, but they are looking for solutions apparently because they said if no lasting solution was found for Athens, and it's a concern that they may be having debt problems as if it's a random event or a surprise that these companies are having problems within debts. The next article was written by myself earlier today, and the article states credit default swap and interest with reality. And a credit default swap is one of the forms of the derivative market. This is an agreement between the buyer and seller of the debt. This is sort of like insurance on the debt. There are many who make a lot of money on credit default swaps, and Gerald Celente has been on record stating these to be criminal activities with very fancy names. In reality, the economic system we are currently using seems to be very criminal, with many fancy names and terms to make one understand the best they can without them understanding reality. It's designed for us to understand that money is something that we have to work very hard to acquire and to be very careful for. We do not want to get into debt problems because money is created by central bankers in the form of making paper dollar notes in the exchange of paper treasury bills. Today, these paper dollars and paper T-bills are made electronically, where over 97% of our money today is not in paper and mint format, it is in digital format. Many can understand that if you miss payment on your credit card or any kind of loan that you have, that there will be an interest payment. Many are very good at making sure that they pay their credit card balances at the end of every month to ensure that there is no interest. However, there are many more who go in massive debt with these credit cards with compounded interest. What has been designed for you not to understand is that compound interest is very dangerous and a guarantee of debt if it gets out of control. It's not a matter of if it will get out of control, but when it got out of control. Keyword when. And what the results are going to be from the action. Part of the reaction from this action was the record foreclosures. Because our money supply, which is created by the central bankers, is monopolized by them, the debt problems are 100% guaranteed by using mathematics of interest. When the Federal Reserve creates money, they are creating principal, and thus we have banks that charge interest and is creating more money to the money supply. This is why every country seems to be in debt and why every human on this planet has some sort of debt problem today. I have yet to have heard or seen an article or video or something that was made by the governments explaining how debt crisis is a guarantee. They will make articles instead that will state such things like, should we be worried of our current debt? As if we are to believe that these debts can be paid off. If this strategy of interest was used to ensure that many civilians live very difficult lives while barely getting by, then they have been doing an amazing job. Nonetheless, like I said, you see uh, different articles where we're supposed to be surprised within the debt issue. Yet, it's all guaranteed.